Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right. December is upon us. They had a nice little 40 and change walk up, just shy of all-time highs last night, 36.64 half. There was news out this morning that they're going to present some kind of a relief package, bipartisan relief package at 10 o'clock in the morning. I don't always look around for whys, but that was an odd little walk up last night until I read that. So somebody had that, and they just took it and they kept walking. I thought about getting in a few different areas, and then it just kept running away and running away and running away. So I just kept watching football. So we were long yesterday into the close, but I don't carry from 1 month into the next, so I really didn't think I was leaving. When I took a 13 handle runner yesterday at the close, I really didn't think I was leaving that much on the table, but you never know. So, all right. So what do they have to do today? Well, the Bulls need to just keep on going. I mean, they really got the Bears on a run. Let's look at the hourly chart. I mean, you can see the 9-day. You had a quick test of that in Globex yesterday, and they wanted nothing to do with it, and now we're about 65, 68 handles above that. So hourly chart, you had the head fake down. The 92 touch that was in the morning off the open. So the open was a little choppy. They did a push down, which is a nice short for us. And then you just see the Bears start to fail again and again and again. And by the time they get back to weekly pivot and they give that up, they've gone ahead and they've blown 2, 3, 4, 5, 6 key areas of potential resistance. As we head into today, they really left. They've left it all behind. They had a real opportunity yesterday to seal off weekly pivot, seal off the 3600 area, and head lower, but they couldn't get it done. I've talked for years about the interplay of the weekly pivot in bull markets or uptrending markets. Whichever side wins the test of the weekly pivot early in the week, and if they can hold that advantage through midweek, tends to get to take advantage of directional pricing into the end of the week. That puts the whole week in the bull's lap. And as long as they hold that hourly midband, and as long as they get things done interday at key areas like volume weighted average price and the 5-minute midband, they can, that 36.68 doesn't have a chance. And I would be not surprised at all if we were printing stuff with 37s on it in no time. It's really the Bulls to lose at this point. The Bears have put in such a just typical performance for them in the last 24 hours that it really just leaves the Bulls with clear sailing. The Bears, you really feel like they need news to affect any kind of change in this tape at all. And if they don't get news that sticks, then news dips or buys, and we keep on marching on. Probably the best the Bears are going to do is try to find some kind of consolidation range up here and keep it jammed in a couple of directions. The bear case always sounds much more logical. I get everything that's going on in the world, and I'm here to tell you that price doesn't give a shit right now. It just doesn't care. And if price doesn't care, you as traders, you don't get to care either. So I don't care how many times you read Barron's. I don't care if you slept in a Holiday Inn Express last night. Price doesn't give a shit. So as long as that's happening, these dips are going to be buys. And, we're threatening all-time highs. And if they can convert the all-time high area and get up into 72 to 77, there's a point where that 3,700 is going to magnify. And you're going to do a very quick 100 handles in the ES. Because there's nobody on the other side that has any interest in stopping them. I mean, is there a point that we're going to get to where you're going to get some real pushback? Sure. You had it at 36.68. They took it back, a decent amount, but ultimately it was a buy. Ultimately, it was a buy. So, volume weighted average price, 36.52. proprietary moving average 5-minute mid-band are jammed in between, call it 60.5. Globex high is 64.5. You see the hourly mid-band there, 36.45, going on 36.46. We'll see how this opens. I'd be very leery of any dip in this tape that doesn't get bought. You can be short, but you have to understand, like we did yesterday, you can be short, but you have to understand when it starts to falter. When it starts to falter, you gotta be taking your profits. You have to see it for what it is, and you've got to reverse your position and get on board with the upside, because that's what's more sustainable. Longs are positions, shorts are just trades. Until there's some piece of news, until the bears can consistently convert key areas of the market, turn them into resistance on a multi-day basis, we will continue to head higher in this market. I've been telling you that for years. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.